Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, March 25th. The stock market took a blow Tuesday from a batch of weak economic news, yet it managed to lift itself up off the mat and finish the day in positive territory. Granted, the S&P 500 tacked on just 3 points, or 0.2%, but that is still a noteworthy performance given the scope of recent gains that left it vulnerable to selling efforts following the weak economic reports. Specifically, the Conference Board's Consumer Confidence Index for March hit a 5-year low at 64.5 and checked in well below the market's expectation for a reading of 73.5. Meanwhile, the S&P Case-Shiller Home Price Index, which measures prices in 20 U.S. metropolitan areas, declined 10.7% versus the year-ago period, the largest drop on record since the measurement began in 2001. The major indices hit their lows for the session shortly after the confidence report at 10 o'clock Eastern Time, but even then, selling efforts lacked conviction. The S&P 500, which had gained 7.4% from its low last Monday entering today's session, dipped just 0.6% at its worst point. A Merrill Lynch downgrade of several banking stocks, including Bank of America, contributed to the early selling pressure. However, a positive earnings pre-announcement from agricultural products company Monsanto and relative strength in the basic materials sector helped keep selling efforts in check. The lack of follow-through selling fostered a rebound trade that was fairly broad-based. Strikingly, the consumer discretionary sector, an obvious target following the weak consumer confidence report, took a leadership role in the recovery effort. That sector ended the day with a loss of 0.3%, but it had been down as much as 1.2%. Similarly, the S&P Retailing Index managed to cut a 2% loss in half by the closing bell. Overall, today's market activity could be characterized as mixed. Held back by Bank of America and IBM, the Dow closed the session with a slight loss, while the Nasdaq Composite and S&P 500 recorded modest gains. Large-cap technology shares were the difference maker for the Nasdaq, which outdistanced the other major indices with a 0.6% gain. It was the S&P 400 Mid-Cap Index, though, that led all comers with a gain of 1%. It is worth noting, too, that the Dow Jones Transportation Average, often viewed as a leading indicator, continued its outperformance, tacking on 0.8% to leave it up 7.2% for the year. The weak data mentioned earlier appeared to weigh on the dollar index, which slipped 1%, and contributed to a day of gains for the Treasury market, with the back end of the yield curve leading the way. The dollar's weakness put a bid back in the commodity market, as evidenced by the 1.6% gain in the CRB index. I'm Pat O'Hare for Briefing.com. Thanks for listening, and have a good evening.